Hello, sir and friend. My name is Rahmadian Eka Surya. Name 191042658. I from class F Accounting. The supporting lecturer Mr. Adi Mursalin SAMM. Courses English Accounting. Part B. Part A. Number 1. Can you explain the principle of historical prices and cite examples in determining the value and obtaining types, both concerning based debt asset based on this principle? Answer. This historical style principle requires the use of cost to record assets, debt, capital, and cost. The definition of acquisition price is the exchange price agreed by both parties involved in a transaction. The acquisition cost of this must occur within a transaction between two parties that burden her action can occur in all transactions with external parties, both related to the asset, liabilities, capital, or other transaction. Because the historical cost is based on the exchange price between free parties, there is difficulty in determining the amount of the acquisition cost if the conditions are not met. For example, in the right of asset reserved as gifts, here there is no exchange price and also the possibility of giving a gift is a party closely related to the company. Under the principle of historical cost of buying and selling prices or costs incurred when the transaction takes place is the initial basis for the recording of assets and debts. This principle is used in the initial listing because the acquisition cost is usually the best estimate for the fair market value of asset or debt. Number 2. Please explain the difference between the principle of recognizing accrual income and cash basis income. Answer. In the principle of recognition of accrual income recognizes the effect of the transaction at the time of the transaction. In the case of transaction in the procurement of goods, selling, services, or expenses, this transaction will be recorded in the bookkeeping as income or expenses regardless of whether cash has been received or issued, otherwise cash disbursement. Number 3. Why must financial statements be presented and reported on time? Answer. Financial statements must be presented in a timely manner because the need for financial statements is vital for a business activity to find out the transactions that have occurred. Calculating profit and loss and financial statements will be used as a basis for decision makers for the company to determine the next step. Financial statements must have comparability. Number 4. Why should expenses and income be reconciled in the same accounting period? Answer. Every company or business activity must conduct bank reconciliation routinely to avoid fatal mistakes in the financial statements and the financial condition of the company itself. There are two cost records in a company, namely a general ledger cash account of the company and a bank report that displays cash received and payments made through the bank. The reconciled report is a record of the company in the bank that often has a different balance, so it must be compared between the two to show that differences can be known. There is a period. Every company or business activity must conduct bank reconciliation routinely to avoid fatal mistakes in the financial statements and the financial condition of the company itself. Number 5. What, in your opinion, why should financial statements be disclosed in full and completely? Answer: so that there is no cheating or reduce the risk of fraud against the money that is managed. In addition, with a complete financial record, we can find out how much is our business expensive and can control ourselves in spending the money. Part B. What is accounting? Collect and organize information kinds. Number 1, analyzing. Number 2, collecting. Number 3, organizing information. What types of information? Number 1, financial information, all about dollars, quantitative in nature and money. Number 2, accounting, issues and abstract change, much more practical than theoretical. You'll learn best by doing. What is accounting? How come? Number 1, individuals be aware of their personal finances. Pay attention of how much comes and goes. Number 2, organization. Organize financial information related to its business. How much product was it able to sell? How much it costs to product the product? How much money it has in the bank? What types of accounting are there? Number 1, 4 main areas of accounting. Bookkeeping. Bookkeepers are responsible for all of the information that is collected and taken into consideration, ensuring that financial information. Number 2, financial accounting. Number 1, income statement, company ownership, leaders, financial analysis, external stakeholders. Number 2, balance sheet, legally regulated, prepared according to a specific set of rules, facilities, investors and leaders. Number 3, cash flow, information prepared by other companies. What is accounting? Accounting logic of business. What is business? Well, you call say business is like somebody taking a hammer, building a house, and then taking his stuff that he made and selling to somebody with money. Then they make their exchange and it is all good. Another way to look at business is that it is a magical box. You take raw materials, put it in the book, and then it comes out as good that you can then sell and make money. That book is business. So let's say that you have a business. You make something that takes you $100 to make and you sell it for $200. You have a profit at $100 and you are happy. I just told you a story about a business that made $100. If you've taken an accounting class, it might be called managerial, financial, or tax. the actual language that external user want to hear you information in is gap. GAAP, which stand for Generally Accepted Accounting Principle. No, internal user what's the name of the language that they went to her. It's actually whatever you want. There is no standard managerial accounting language. If you're business and you are talking to an external user, you want to look good or so that you made a high profit. Internal user want to hear your story based on the language of managerial. External user want to hear it based on gap, and the government wants to hear it based on the tax codes. Question of the ages. I'm sure you've thought about them for years. How crucial is accounting? We see here on the list all of modern civilization. So what exactly is accounting? Well, first it's quantitative. You know this it's number. I love number, and so do you. Accounting is all about numbers. Accounting is financial in nature. That means money, numbers about money. Our two favorite things right here, there in accounting. Third, accounting is meant to be useful. Now, there's a whole field of study in accounting theory, and in another day, in another place, we call talk about accounting theory. But really, the fundamental purpose of accounting is to be useful. It's a very practical field of study, useful for what? That's the fourth aspect of accounting, useful in making decisions. Accounting helps you use the past right now in the present to change. Accounting is quantitative numbers about money to help people, you and me, make better decisions. That's accounting. There are four kinds of accounting, or I'll call them flavors of accounting. First, the most fundamental type of accounting, bookkeeping, just the routine gathering. Everything get recorded, because if it doesn't get recorded, well, never know. So bookkeeping, gathering the information systematically. The second flavor of accounting is called financial. Let's start with bookkeeping. All accounting begins with bookkeeping. You've got to get the information down, and then you can start to organize it to make better decisions. So bookkeeping is where it all begins. Let's do a thought experiment. Let's invent in our minds a catastrophe movie. The catastrophe movie is this: of space virus comes, infects Earth, and destroys all novels that have ever been written. Tom Sawyer gone with the wind is gone with the wind. They're all gone. Could you then function the next morning, knowing that all novels have deciphered overnight? Well, you feel horrible, a tragic cultural loss. But if you went to the bank to get some cash out, okay, fine, you got some cash here. If you went to the store to stop, everything's working fine there. Everything is working perfectly. Everyone's feeling sad because who want to know how you're doing, so give them a report of what economic resources you have. Did you make money last year? Did you lose money last year? Just summary report to people at outset who might be thinking of losing your money or might be thinking of investing. Accounting reporting